Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Scott Melker, crypto trader and investor. He's also the host of the Wolf of All Streets podcast and the author of one of my favorite newsletters, The Wolf Den. Scott, it's great to see you as always. Welcome back to Trade Talks. And I want to talk to you about the Ethereum merge. I have a feeling we're going to hear a lot about this over the next 4 weeks. Explain to us what that is.
At a very basic level, Ethereum is moving from proof of work consensus to proof of stake. Proof of work obviously has gotten quite a bit of media attention over the years with Bitcoin's environmental concerns, which a lot of people will tell you are a bit bogus and that the arguments are actually poor against it. But proof of work obviously requires a lot of computational power and electricity. Ethereum is moving from proof of work to proof of stake, which means that distributed nodes basically confirm all the transactions. I know that sounds really complex, but what it is basically moving from a system that was older and used with Bitcoin to what a lot of newer cryptocurrencies and blockchains are using, which allows for much less environmental impact, faster transactions, things like that.
So how will Ethereum 2.0 be different than Ethereum, with the exception of the energy consumption that you just mentioned?
To the end user, it shouldn't be different at all. In fact, you don't really need to do anything. You just need to sit there and allow it to happen. They even claim that the blockchain won't go offline at all. There should be zero downtime, even with the transfer. It's just a massive event. Nothing like this has ever been tried in the cryptocurrency space. And assuming that it's pulled off successfully, this is about as big as it gets for any asset in the crypto space.
You know, Scott, it's so funny. The more I read about this, I keep thinking of Y2K, when everything went from 1999 to 2000. I mean, I remember, like, I believe it was over a weekend, maybe Sunday, but I remember like we had to go to work and be on the desks to make sure that things were going to operate for the next trading session. It just reminds me a lot of that, but to see how far the technology has evolved, and it shouldn't be that perceived as chaotic as an event is pretty quite remarkable. Is there anything we need to do ahead of the merge in terms of the Ethereum that we currently hold? Is there any risk associated with it?
No, there's no risk associated with it. Now, there may be some forks. People are saying that there may be miners who attempt to fork the chain and keep a proof of work version of Ethereum, much like we saw with Bitcoin Cash in the past or Ethereum Classic. That's all very complex. All that would happen if you're a user is you would get some free tokens. You would actually get a match 1-for-1 of the new tokens with the old ones. But in general, there's literally nothing you should do. And that's important to note, because this would be a great opportunity, honestly, for hackers and scammers and phishing to take advantage of you and tell you, hey, send your Ethereum here and we'll transfer it to the new kind. There is none of that. You don't need to do any of those things. Wherever your Ethereum is sitting right now, it will remain sitting and will automatically convert.
Well, thank you for that public service announcement, because that really is key to know. I wasn't even aware of that. So will the price of Ethereum surge leading up into the event, or is this a sell the news kind of moment? I mean, the merge, the concept of it has been out there for quite some time.
Yeah, there's so many ways to approach this. The honest answer that anyone can give you is, I don't know, right? I wouldn't be surprised. Listen, we've seen a run up from sub $1,000 to $2,000 effectively. You know, the price of Ethereum has more than doubled. Maybe that was already the move, and we will have a sell the news event temporarily. But long term, fundamentally, this is an extremely bullish transition. Basically, Ethereum becomes a yield-bearing asset, you know, much like a dividend stock. There'll be a 7 or 8% yield is what's predicted if you stake in the Ethereum smart contract to become a node and to become a validator. So a lot of supply is being removed from the market, and that's earning yield. And that's a concept that I think a lot of legacy investors can wrap their heads around. So I think once this happens, and the supply will also naturally decrease with the burns, there's a lot of fundamentally bullish things that happen with this merge. And like I said, I think that those narratives are what are going to play out long term. So even if we see a short-term pullback on a sell the news sort of event, right, which I don't expect, I think we're going to see massive upside over in the years to come.
I have to ask you this, though. You mentioned the word yield, and we know what has happened over the past couple of months with various exchanges and platforms being eliminated because of the yield that they were offering. Does that same sort of risk exist with this?
This is completely different, right?
Okay.
So what we saw with those platforms was basically people viewing a platform as a bank, putting their assets in there, and that quote unquote bank, Celsius, Voyager, were taking that money and making basically risky loans or even prop trading, or basically doing they're acting like hedge funds rather than like banks, right? Taking your money, going out there, trying to make a bunch and then hand you part of that yield. And that works very well during an exceptional bull market. But obviously during the bear market, those people end up not being as good of God tier traders as they expect. And we saw sort of the fallout from Luna and Three Arrows Capital to really illustrate that. But no, this is very, very different. This is parking it in a smart contract that can't be hacked, it can't be exploited, and there's no reason to believe that those funds would be lost. This is very actually safe yield in the true ethos of crypto.
All right, and Scott, to wrap up here, carrying along with that theme, is crypto contagion for the most part over then?
I think so. I actually had a very interesting panel this morning with Raul Paul, Mark Yusko, and Anthony Scaramucci, which was incredible. And that was the first question that I asked. I said, listen, we've seen crypto definitely bear the brunt of this bear market, much worse than other assets, largely because of these sort of self-inflicted wounds of Luna, Three Arrows Capital, lending, yield, leverage, tale as old as time, like Beauty and the Beast, right? But no surprises. But it really has been absolutely awful. But the biggest players now, I think, have been exposed, either eliminated, or we've seen what their exposure was to the contagion. I think there may be some slight small hedge funds or something that go under that we don't know about yet, but none of them big enough to affect the market. So I do think that we've kind of come out of a crypto winter into a crypto spring, as Mark Yusko said. But that doesn't mean it's summer yet, right? Spring, in this case, can last a long time. My feelings at the bottom is likely in, or even if we get another dip, very close. I think a lot of people feel that way about the crypto and legacy markets.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.